Good afternoon, and thank you for being here at this webinar hosted by the Association of British Insurers and sponsored by PwC. I'm Matt Cullen, I'm Head of Strategy at the ABI, and among other things that means I'm responsible for developing our forward policy agenda on data and digital issues, of which hosting this webinar is a part. I hope that by the end of this session we'll all have a much better understanding of what the digital world means for insurers, both in terms of our engagement with customers, in terms of trust, the risks of disruption and much more. And to help us get there, I'm joined by three expert colleagues from PwC. To my right we have Graham Jackson, who's a partner in the insurance consulting practice. To my immediate left we have Steve Gough, who's a director in the insurance practice and has a focus on digital and the customer. And at the far end, we have Jonathan Burdett, who is a director in the insurance tech risk practice, who specialises in cyber. I'm going to start by facilitating some thoughts from my PwC colleagues for about 25 minutes or so. During that time, please do send in any questions you have. We will move on to those questions in the second half of the session and try and get through as many of those as we can. Do rest assured that for any we don't get through, we will try and make sure we come back to you offline after the webinar with an answer. Finally, I just want to quickly publish a plug for the ABI's data conference on the 9th of September. It should be a really great opportunity to find out more about the issues we're going to discuss today and a lot more over the course of an entire day. And for those of you who are registered for this webinar, you get 15% off the list price, so you really do have no excuse not to be there. That's enough of a plug from me. So without further ado, let's start by asking a question to you, Graham, first. I guess in terms of context, digital is a buzzword at the moment. What do you think digital means from your perspective, and what particularly do you think it means for the insurance sector?
Okay, well, thanks, Matt. Thanks for the invitation to be at what I believe is the ABI's first ever webinar. So digital is clearly a hot topic right now, and I think the way I think about digital has certainly been changed recently. Last week I was out in Silicon Valley doing a tour of digital R&D and looking at how it's shaping the FS technology industry, and I think certainly it's changed how I think about digital. I think there's a tidal wave of VC cash backed up by a series of innovators and entrepreneurs who are trying to transform how FS is delivered, but also particularly how insurance actually works. So I think, perhaps I started off thinking about digital purely or principally as a technology play, and I thought about digital as a kind of wrapped up in social, it's about mobile, it's about analytics, it's about cloud. Actually, what I found when I was out there was something completely different. I think digital is truly about transforming business models. It's truly about finding ways in which insurance companies can engage in a very compelling fashion with their customers. And it's also about finding new avenues for accelerating profitable growth. So, how I think about digital, I guess, would probably be wrapped up into four overarching themes right now. The first theme is about customer engagement. How can we find ways of creating a compelling and contextualized experience, not only for our customers, but for our business partners, even our employees? Secondly, what came reinforced to me was the whole trust angle. How can we build a digital insurance business that encourages and delivers on the promise of trust when we are, in essence, looking after truly private and personal data of our insureds? The third angle is digitization of the enterprise. Again, how can we use digital technologies to deliver not just an incremental improvement in business performance, but how can we truly transform how an organization operates and performs? And I guess the fourth angle, which we'll probably come back to later, is disruption. People are looking to fundamentally change business models, and I think digital gives you that vehicle for it. I think my final perspective on kind of summarizing digital was, whilst I was out in Silicon Valley, no one was really talking about constructing and executing a digital strategy. Everyone was talking about how can we execute at pace a business strategy that just happens to be executed in a digital age. And I think that's quite a clever way of thinking about this stuff.
Okay, thanks very much. And the first of the trends that you mentioned there was customer engagement. So let's move on to that one first, Steve. Clearly, insurance is a relatively low engagement product, limited touch points between the company and the customer by and large. So in the digital world, what do you think insurance companies should be doing to utilise that to better engage with their customers?
Yeah, absolutely, Matt. I mean, as you say, it's a real difficult one. You know, insurance is a product that we need. Absolutely, we need it, but it's not one we necessarily desire. You know, it's not a mobile phone, it's not a tablet, it's not a piece of clothing. You know, it's hard to get that engagement with customers. But I do think, you know, digital has a way to help insurers better engage. Now, we did a piece of research last year globally, about 9,000 customers and about 1,500 in the UK, and we talked about digital and their attitude to digital. And what became very clear is right through from research, through to quote and buy, through to service, through to claim, overwhelmingly customers said we would prefer to interact digitally. So absolutely, they're there to interact digitally. And I think customer expectations have changed. You know, we're in a one-click buy, one-click service kind of culture now. And so customers expect simplicity, they expect it easy to use, easy to get what they need and get to the answer they need, get to a price and then actually to purchase. But even if insurers do that, and you know, there's a lot of work involved in doing that sometimes, but even if you do that, you're reaching parity, it's a hygiene factor, it's table stakes. Customers aren't going to think you differentiate if you do that. They're just going to think, that's what I expected anyway. So really we've got to think beyond that, and beyond that sort of transactional relationship into one of engagement. And I think with the onset of sort of telematics and sensors and this whole digital wake we leave behind us at the moment, I think there is a way that customers are starting to be able to share their information with insurers, and insurers provide that value back to the customer. And again, through our research, you know, 50% of customers said, yeah, I would put a sensor in my car or my home if there was something in return, such as a reduction in premium. So absolutely, there is a desire there again for that. But I think it's going beyond that. It's going beyond just the premium discussion. So it's about things like turning it into gamification. So how can we give, sort of in a commercial lines context, give it to a fleet, and so all the fleet drivers are using the telematics. We're creating a leaderboard, who's the safest driver, who's the most economical driver, and creating that bit of gamification. And through gamification drives engagement, drives involvement. So absolutely, I think that's another aspect to consider, which we've seen from other industries. I think also there's kind of the group or social aspect, where we've seen group lending, group buying in other industries. We're starting to see that insurance now as well. How do people come together and buy insurance together? And they get, you know, obviously they get the benefit of the collective buying power of that group. But how can we create that group into a community? So you can imagine in a cul-de-sac, the whole group, you know, many houses coming together, many families, and saying, we're going to go and buy insurance together. But in doing that, we're going to make sure that our premiums are reduced by reducing our own risk. So we'll look out for our neighbour when they're on holiday. We're going to have sensors across the street and in our homes that together lowers our risk and lowers our premium, and actually create a community and use that as a buying process. And I think then finally, if you think about in the life and pensions arena, I mean, I think with the change in legislation around annuities, I think there's all sorts of changes in terms of engaging with customers where there's not been as much engagement before. And I think it's about creating more touch points around, you know, typically it could be one or two a lifetime in this industry, but now we're saying actually, if we can provide advice to a customer early on about how do you plan for your retirement, how do you save correctly, how do you make the trade-off choices in your day-to-day life to make you properly plan for your future, and then when in retirement, how do you make those trade-offs as well? You could create a whole lifetime engagement there with the customer rather than a single point of sale and a single point of transaction. So I think absolutely digital opens up some brand new models, it opens up some enhancements to existing models, but it's not transactionals, it's about driving customer engagement.
Yeah, and I guess all of this consumer engagement stuff influences, but is also influenced by this one little word, which is trust. And trust is obviously an area which we're all thinking about a lot at the moment. Really important that we work on trust and reputation of the industry as a whole. I guess a question for you, Jonathan, is in the digital world where trust can be gained and can be lost so quickly and so easily, what should insurers be doing in that context on the trust front?
Yeah, and you're absolutely right. A little word, it can be gained and lost very quickly. The insurance is at its heart, a trust product is the promise to be there for the customer when they need it. So insurers have long known how important that is. A second wave of trust challenges hit the industry as the world became more complex, and the challenge from customers and regulators was fairly, are we giving the best advice and giving the right products that really meets the customer needs? But while that's happening, this digital innovation's coming, and it's moving the trust challenge again to say, how can you trust the data that I'm giving over and the interactions that I'm having with you? I think there are a couple of things that insurers need to be thinking about right now as that happens. And the first is just making that the basis of that trust, the basis you're asking the customer to trust you, explicit and clear. And there's no absolute point at which that's drawn. A lot of the big technology innovators have moved where that line is by asking the customer quite explicitly to share more data with me, trust that I'll use that to give you a better service or a better price or other value that's worthwhile that you're looking for. And on that basis, I will look after your data. Others have drawn in a different position and said, we would never use your personal data for anything other than the needs that you would. Insurers need to find their own place, each individual insurer, depending on the nature of their business, where they draw the line. But if that's explicit and it's clear and understood, then the customer has a basis for putting their trust in that. But obviously that throws a challenge back to the organisation. If you're putting that promise out to the customer and being clear, you've got to be able to deliver on it. And I think that's a big challenge when we're dealing with new technologies, new business models, and new innovations. Many organisations, many insurers are used to having control frameworks that operate across their functions, across underwriting, claims, across technology, used to having risk functions, support that and challenge it, compliance functions to make sure that it meets the regulatory requirements. We're used to having internal auditors come and review regularly, that 3 lines of defence model. But what's happening in the digital space now is many organisations are having small digital innovation hubs or digital units really push the envelope of what the organisation can do, deploying the technology quickly, quite often testing, failing, testing again, and taking it forward. And so those control frameworks and control functions need to be adapting and moving quicker so that they're supporting that innovation and that speed of change rather than being a brake on it and slowing everything down while we wait for a risk assessment or an audit or a control review of that. So there's a big challenge there to be explicit with the customer about what that basis for trust is, thinking about those outcomes, and then having the processes internally for management and the board to be able to trust those innovations as they come through.
Okay, thank you. Great insights so far, gents. I must say we're struggling for questions so far, so please don't leave me hanging as we get through the next 15 minutes. Steve, let's bring things internally now. If we look inside our organisations, are there ways that insurers can be using the digital world to change their internal processes, the ways they operate, to improve things in that side of things?
Yeah, absolutely. I mean, I think it's you kind of look at the digital wave and the digital technology hitting organisations internally. It's a bit akin to sort of 10, 20 years ago in the manufacturing industry when robots first arrived on the plant floor and about how they improved efficiency and effectiveness through that process. And I think we're seeing the same now in what we call knowledge work. And it's actually where there's data-intensive work, how can technology and digital technology both enhance and automate the job that people are doing? And obviously insurance is a pretty heavy, a data-heavy industry. And I think there's a lot of place to play there in terms of improving efficiency and the expense ratio and improving profitability ultimately. Yeah. And there's 3 areas I think we look at there in terms of there's sort of augmentation, there's automation, and there's collaboration. So I think in terms of augmentation, as I said earlier about use of data, I think there's some great little tools out there now that make it much easier to take complex data sets and visualise them in a new way. How can you overlay information perhaps on a map of the UK in terms of concentrations of properties and property risks, perhaps with retail outlets of coffee companies, and understand some sort of insight between these 2 disparate sources? And I think it's the way of bringing in different data sources on top of what insurers already have as a steady flow of data, and actually visualising it in a new way, being able to model in different scenarios in a very interactive way to look for those insights. And I think digital technology really supports that. Another way it can augment is in thinking about the contact centre. So if we can look at places where in discussions with a customer we're using speech recognition to automatically identify what the customer's talking about, prompting the agent with a knowledge article that helps them answer the question that's there right in front of them when they need it. It's all about serving the customer better, but it's helping the contact centre person do their job more easily and better for the customer and quicker for the customer. It's not replacing the individual, it's just enhancing and augmenting what they do. I think moving on to the next one then is around automation. Talent is scarce in this industry, good actuarial, good pricing, good digital people. How can we take out some of those tasks that maybe people are feeling bogged down with today? And again, digital technology gives you that option with sort of automated workflow, with decision rules, with identifying patterns in data, that actually you could automate some sort of the lower value tasks. How could you take a very low value claim, completely go through, straight through process it, not have it meet any sort of claims handler on the way and get paid to the customer within days or even hours, and therefore free up those claims handlers for more complex interactions with customers. So automation definitely plays a part there. And then the bit that I think is really interesting is how artificial intelligence and machine learning could really change this industry. I mean, especially you look at the sort of robo-advice models coming in now. Sort of Turing was right in terms of could you really know if it's a human at the other end of this or not? And would you trust, back to the trust word, would you trust a robo-advice model to do your investments for you, your investment planning and planning for your long-term saving? But those models are out there, the technology's out there. It's kind of just when are we ready for it, and are we ready for it, and how do we protect both our customers and ourselves from it? And I think finally it's around actually collaboration. In this innovative digital world, we need to move fast, we need to come up with ideas, things are changing all the time. How do we surface all those great ideas that are in the organisation? From the contact centre staff, from the claims handlers, from pricing, from underwriting, all parts of the business will have ideas, will have great ideas. And how do we harness those, bubble them up, work out which ones are best, build on each idea and collaborate around them, swarm around an idea and create something that's real? And I think digital technology enables us to do that. And I think we use that in our firm as well, as how do we get the best out of our firm and bring the best of everyone involved and actually use those technologies to help deliver for customers. So absolutely I think digital provides a great way of providing more efficiency in the organisation, more effectiveness.
That artificial intelligence insight sounds pretty scary to me. Something else that might be scary to some people watching is the prospect of disruption. Obviously, the insurance industry has seen significant disruption already. We look at the rise of the price comparison websites in personal lines, for example, Graham. Someone I talked to in a different sector a few months ago said that he'd never seen a sector more ripe for disruption than the UK insurance sector, and that stuck with me quite strongly over the last few months. So what do you think the risks coming over the horizon are for the established players?
Well, hopefully, Matt, they're not going to be risks and they're going to be opportunities, but there are a series of game-changing, perhaps technology-type innovations, which will have a profound and far-reaching business impact. So I suggest anyone listening to this webinar has a cursory look at what's happening with blockchain, what's happening with 3D printing. We've mentioned AI, we've talked a little bit about gaming, but certainly look at the augmented reality offerings out there. I'm going to focus on two. I'll focus on driverless cars and I'm going to focus on mapping the human genome, because I think both of those are very real and they're impacting the industry right now. I think so. Driverless cars, Tesla not only just, Tesla make amazing looking cars, but they're very close to having their own driverless cars out on the roads. Google are pretty close as well. So driverless cars are real and they're going to happen soon. I was reading some research recently that said maybe in as little as 20 years, certain US cities are going to ban self-drive cars. So we're going to move to a world of driverless cars, which I think will have fundamental and far-reaching impact on economies. Now, on a macro scale, I read recently that certain US cities have a third of their land space zoned for car parking. Well, if we move into a world where people don't drive their own cars and instead call a vehicle to them by an app and the cars are constantly on the road, what happens to commercial land values? But if we were to take that economic impact down to the individual, outside of where people live, I guess for the majority of people, the car is their biggest single item of expenditure. Well, I believe Uber has recently completed some research and said, well, if you live in Los Angeles and you drive less than 10,000 miles a year, it will save you money to do all your journeys by Uber. So we'll be living in a world where people potentially will have great swathes of discretionary income freed up from their typical personal expenditure patterns, and that must present an enormous opportunity for the life pensions and savings industry to find ways of going after that money to sell some of these long-term savings products. But there's even on the driverless car side, there's obviously a profound impact on private motor insurance. So it's quite easy to construct a scenario that says private motor insurance in this world will disappear, because you will no longer perhaps be insuring the individual, you'll no longer perhaps be insuring the car. The only thing you've got to insure is the network. And insurers that sell insurance at that macro scale to networks look very different to insurers that compete in the market today. The second major technology disruption that's coming from afar and has probably landed already is around mapping the human genome. So in 2003, I think the first human genome was mapped. It took 10 years and it cost a mind-boggling $1 billion to do it. It can now be done in less than 24 hours for the price of a cup of tea. Let's look at, there's a company in America that's recently launched in the UK who will send you a saliva sampling kit, which can be used to map your 23 chromosomes, and within 1 week they will give you a full diagnostic and predictive view of your health and your likely exposure to 65 different medical conditions. Map that onto the genome data that we're getting. Suddenly stories around people's health and how they're going to develop and their propensity to get ill is no longer an art and a risk and a gamble. It becomes known. I think combine that with the data you can get from wearable technology, we're moving very quickly to a world where it's going to be very difficult to pull risks. And if you can't pull risks, can you actually sell insurance in that context? So I think, just through driverless cars and also through mapping of that human genome, I think the world is moving so quickly that insurers need to think very cleverly and very quickly about what it is they can potentially do.
Yeah, real significant changes on the way. Thank you to all those of you who are watching who've responded to my call for questions very well. And we'll come to those questions after one more question I'm going to ask each of the panellists here. And that really is that given all that you've talked about across those various issues, what would you say are the key things, and let's start with you, Graham, that an insurer can do out there on the ground to become a genuinely digital insurer?
Okay, that's interesting. Let me give a couple of perspectives on that, Matt. I think the first one is no one can be sure in this market, in this context of fast change, as to what the winning bets will be. So the idea that the insurance industry or insurance companies can place one or two large bets and hope one of those two will be successful and execute them over a long period of time has long gone away. So I think it's now a world of placing a series of smaller bets, fail quickly, fail cheaply, unite at pace and unite at scale behind the winning bets, would I guess be my first perspective. I think my second perspective on this would be to challenge whether or not the insurance companies themselves truly have the culture to be innovative. And the challenge then says, rather than be innovative and try and come up with your own ideas, perhaps the capability you can build is one of being able to look to the market, look to the VC firms, look to the innovators, look to what's going on in the hackathons and the skunkathons and the protathons. Try and find a series of ideas that you can buy and you can invest in and work out how you can leverage those in your existing business.
Great, thank you. Steve, anything to add to that?
I've got to come back to the customer, and I think if you're going to engage with customers, you've really got to listen to them. You've got to involve them from the start. I mean, I think if you're going through those innovation processes, you bring those ideas, new ideas to market. Absolutely work with customers on that. Understand which of those really matter to them, which ones of those play to them, and which how do you position that to drive the right outcome for your customers. And then once you've got those ideas live and throughout it, it's understanding, getting feedback all the time. What's the effort customers having to put in? Customer expectations are changing, they'll change further. So what was great and innovative and differentiating in 2 years' time could be just table stakes again. So it's always tracking where are customers at, what effort are they applying to try and do business with you, making that as simple as possible, and then having that permeate throughout the organisation. It's not the responsibility of just the digital team or the contact centre team, it's the whole business needs to understand their effect they have on what they're doing for the customer.
Jonathan, anything that you'd add?
Yeah, well, I think I'd do a build on Steve's, focus on the customer, to go back to and be explicit about the basis of trust, what it is you're asking them for and what you're going to do in return for that. And then I'd do a build on Graham to say take that digital capability right through the organisation, not just the customer facing ends, but right the way through the organisation and into the risk and compliance and audit and assurance functions, so that you take them on the journey with you and you build it safe and compliant from the outset, not that becomes a stumbling block later on, slowing down the innovation.
Okay, well, thanks very much for that. I'm glad to say we've got quite a few questions that have come in. Do keep them coming in, everybody. I'm going to start, I'm afraid, Graham, with probably quite a challenging one for you, because I've got a couple of easier ones for Steve and Jonathan following on later. We've had a question here about, I guess the kind of conflict which emerges when you have extremely good understanding of risk as a result of data, and how that maybe conflicts with insurers' responsibility to their shareholders to maximise profits. And does that create kind of ethical or moral dilemmas in terms of pricing people out of the market, or maybe dubious price optimisation strategies, or so on and so forth? Are there risks that we have to be on top of as we get better at understanding risk through data?
You know what, Matt, you're right, that's a really difficult question, because I think the more you think about it, you start coming up with what are some potentially really difficult answers. So I was recently talking to the chief economist of a major financial services institution in the UK, and actually talking to him about what's happening in genomes, and as you say, as insurers get more and more accuracy on risk, what can actually happen. And his view was, and he was a global chief economist, so his view was, well, the answer, of course, lies in the UK, and the answer to things like medical insurance will have to be, at some point, private provision won't work, and the state will have to step in, as it has to do typically when there are market failures. So I think if you take this all the way to its logical conclusion, you're right, there'll be some very difficult challenges out there, and I guess that's where the regulatory bodies probably need to get involved to make sure there isn't a strata of our society who aren't left behind, because quite frankly, they were unlucky in the lottery of life and have a set of chromosomes and have a DNA footprint that kind of isn't particularly insurable.
Yeah. Okay, difficult one for us to think about. Sorry about that one. Yeah. This one might be a little easier for you, Steve. We've had a question here that asks, how would you create additional touch points with a customer to engage with them? For example, if you were offering car insurance without telematics, are there less sophisticated potentially ways in which you can up that engagement to achieve the outcomes you need? Yeah,
I think there's definitely some ways of achieving this, and I think it's back to understanding the outcomes customers are looking to achieve, and it's that understanding where you can play in that environment, understanding sort of the credibility that you have as a brand. So I think there's definitely opportunities for insurers around, I don't know, if you take home insurance, about the sort of adjunct to that, about how do you live a more environmentally friendly home, and how can you drive environmentally friendly aspects of your home, maybe an app that shows you, how much you'll spend, bring together data from your utilities companies and bring that together to understand how's your home function better. So I think it is, create those touch points is about understanding what the customer outcomes, where can you match your brand and what you're offering, and remember, it's changing the nature of insurance, remembering what insurance is there for. It's about, about remediation if something goes wrong, but prevention as well. So it's how do you prevent things from happening. So I think there's absolutely places to play there in terms of providing that advice and guidance for customers.
Okay. Jonathan, one for you. Clearly insurance is a very different sector to some of the much more innovative sectors in society. So the Facebook and Google parts of society, renowned for innovation. But we've got a question here about how an insurance sector, which is often so bogged down with kind of paper-based compliance and stringent risk and regulatory regimes, can manage to innovate at the same kind of rate or to the same kind of level. What are the risks with that?
Well, it's a great question. I think we touched a little bit earlier on driving this digital thinking right through the organisation. The risk in the regulation is never going to drive organisational success. What it can do is prevent catastrophic failure. And I think that's the way round to think of it. Stephen mentioned earlier looking to other industries and other sectors. Graham talked about some of the incredible things going on now in some of the innovations. So I think nobody is going to have innovation purely by looking internally. We've got to look out there to what's happening out in the industry, and then use the risk and the compliance functions, partly bring them along so that they can have, see these things and learn as they're going, but help support that journey and that innovation rather than let it be a break or a problem later.
Yeah. Okay, we've got a fourth question that's come in. Not sure who this one's for, so feel free to jump in. Group lending's been mentioned, but as we start to think about group lending, sharing economy, these new kind of ways of the economy functioning, someone has pointed out that there aren't many insurers who've really got with the game in terms of offering insurance products which are appropriate to service the needs of those kind of firms. Mm-hmm. And the question is, when do you think insurers are going to get with the programme to help these new parts of society operate more effectively?
Well, I'll take that to start with. I think, absolutely this is something that's coming and it's happening. It's one of those innovations, it's perhaps a bit like telematics, that something's going to happen. Someone's going to innovate, and people are innovating. And I suppose what we've been talking about earlier is someone's going to come in, and it may not be an established player. It may be someone, the barriers to entry aren't what they were in the insurance industry, and I think that's one of the things that digital really drives is innovation and startups coming in. So it's kind of almost somebody is coming in. There already are startups doing this, so I think somebody's going to, or they're going to continue to. So it's kind of it's the bigger companies looking about how do they play, what does it work in terms of their brand strength and their business model. At the end of the day, it may not be appropriate for them, but I think it's there. There's leaders out there globally to look at, startups out there globally to look at, and I think it's putting the toe in the water and trialing it, and perhaps failing fast, but hopefully succeeding quickly as well.
I guess maybe leading on from that, where do you think UK insurers should be looking at for inspiration? Should it be other sectors, other countries where there's innovative stuff going on?
Yeah, no, I think absolutely other countries. I mean, I think if our research proved anything last year, the UK insurance industry is one of the most digital in the world. So I think there are other examples out there in different territories, but I think the UK is doing some great stuff as well in insurance. But I would look to other industries as well. I'd look to financial services, but above and beyond as well. But then, as Graham mentioned earlier, I mean, these startups, absolutely, you go to Silicon Valley and San Francisco, but we've got some great startups in the UK as well. Due to the economy and the rules we have in this country, we're really encouraging startups, and London's a great place for that. And I think you're seeing a lot of sort of fintech startups coming all the time. So I'd say to insurers, go out there, attend these events, meet these startups, hold your own hackathons, and just get engaged with these startups. In a sense, one in 10 may succeed, 1 in 100, but get there, understand what's going on, and really see, does it work for you? I think that's where I'd look for the innovation and the inspiration.
Okay, let's take another question then. Let's think about who are the relevant sections of society for this? Is digital something which only refers to kind of the millennials, the Generation Zs, the young people of this world, or are there untapped markets amongst older segments of the public as well?
Okay, well, I see the older members of the public. Thank you for that. I cast my mind back to about a project I did about 22 years ago for a major UK building society. And what we did at the time was a state-of-the-art technology implementation of a touch kiosk in a banking branch. And the idea was with this latest technology, we try and introduce 20 to 25-year-olds to a banking relationship, get them comfortable coming into a bank branch and entering into, albeit an electronic dialogue with their bank. So we rolled these kiosks out to 20 bank branches, and we were startled by what we found. Not in a single bank branch did a young person ever use them. The only people that were using them were people with time on their hands, which were the retirees and the pensioners. And I kind of think that whole idea of, I think to exploit innovation in digital, there's often unintended consequences or unintended results. And that's why the idea that you can plan and design something, be pretty confident about it, and take it out to market is not the right way to do it. You kind of plan and design quickly, but you test and refine become far more important. And you've really just got to look at, I mean, I see you clutching your iPad. The segment of the population that have bought the most iPads are the 55-year-olds and over. And I think thinking about digital and the opportunities from digital as the millennials play, I think you're really missing the trick here. I think it's something that will relate right across all stratas in society.
I'm just picking that one up, and again, harking back to the research we did last year, and again back to telematics and devices in cars or homes, the age group that there was the strongest desire for it was 35 to 45-year-olds. And the younger age groups, where typically that's where a lot of the telematics plays are today to reduce premium, were not so forthcoming with having someone monitor how they're driving or living, and draw those conclusions yourselves. But absolutely, I think the 35 to 45 was the highest take-up of that. So I think, as Graham said, your perils say that it's going to be just the digital natives.
Although I do think there is a different play between the generation who grew up sharing their information on Facebook, sharing their information via social media, and those people who've come to it later and expect privacy and expect confidentiality. So that the basis of that trust relationship, the way you're playing that may be different for different target audiences, but it's not a simple binary millennials versus.
Okay, let's couple more questions then. Let's think about the commercial insurance world. So I guess most of what we've talked about probably feels most linked to the kind of personal lines kind of environment. Someone's asked a question about how can insurers gain feedback or build customer engagement in the more commercial arena, which is very heavily intermediated. Brokers, very significant part of that market, and often insurers and the customer actually don't have that much direct contact with each other. And what's the role of the broker? What's the role of intermediation in the digital world?
Yeah, I mean, I think sort of pick that one up to start with. I think the commercial insurance sector, I think, is a really interesting one when it comes to digital, because I mean, I think you've got so many different types of customers, a number of different types of products, and that's where digital plays. And I think it's again back to, I'm going to hark on about it. It's understanding what customer need is and their desire. And I think in commercial insurance, it's quite different. It's you're protecting yourself, but you're protecting your business as well. And when you get down to the sort of SME end of the spectrum, I think digital has a great place to play around educating startups, as we talked about. They need insurance too. They don't know what their business looks like in 6 months, don't mind about 12 months, but they also don't know what they need. So I think digital can provide a really good way of providing education and advice for some quite complicated products and vehicles that someone who's just started a startup in Shoreditch hasn't got a clue about. So I think actually digital does play a part. I think with the broker, I think absolutely that's then both giving digital to the broker and then providing that your customer's customer, providing it straight through to the customer as well. So I think going back to sort of data and how you use data, I think insurers can really provide a good wealth of data back to brokers that they can use more easily as well. Likewise, making it as easy as possible for the broker to interact with the insurer as well, in the same way a personal lines customer might. Making that experience as easy as possible using digital, using collaboration, as I talked about earlier as well. So I think, for me, I think it's a really interesting part of the market that is just ripe for real digital innovation to come and change the market.
Great. Anyone else on that, or shall I move on to the next question?
I mean, just to do a build, I think, on what Steve said is if I was a broker right now, a commercial lines broker, I'd be really, really excited about what is happening in the world of digital. I think this presents an amazing opportunity to truly cement and enhance their position in the value chain. So using that wealth of data that they have to help their end customers, the businesses that they're insured, to better manage their risks, to help them predict potential future losses. I mean, there's a wonderful insurance company out of the States called Climate Corps, who will actually help pay out on crop insurance before the weather incident actually hits, because they're tracking weather systems and they can call it and they can predict it. Well, getting brokers involved in that process and getting them to own and help manage that data and help represent their insureds with the underlying insurers and reinsurers to expedite that overall claims process can only be a powerful thing.
And that reminds me of in the winter floods in the UK at the beginning of 2014. I remember working in flooding at the time. There were lots of UK insurers starting to pre-warn their customers about flooding that was about to happen on their street, and that real proactive approach to trying to manage the risk before it hits actually is a really important part of the process. Thanks very much for all of the questions, everybody. It makes things a lot easier for me. I'm not sure we'll get through all of these, but we do have time for a couple more, I think. We've got a question here about kind of capability and skills. What should an insurance company be doing if it finds itself without the people who have the ability to implement a strategy for the digital age? It doesn't feel like it has the right capabilities. Is it best to build those internally, to acquire them, to partner, to bring those in? What's the right approach there?
I mean, let me start off with the perspective on this, Matt. And actually, recently PwC completed some research on the global FS industry, and I'm pretty sure this applies to the UK insurance industry particularly, and that is something like the global FS industry is spending about a mind-boggling $50 billion a year on innovation. Well, almost half of that is being spent by the VC firms and by pure play technology startups, and I think it poses a real challenging question for insurers, which is, should we try and build those capabilities in-house, or should we be a little bit smarter in doing other things? And that other thing is keeping a very close eye out on what innovation is happening and being in the best position to do the acquisitions. And again, as part of my Silicon Valley tour last week, it was really interesting to go and talk to a couple of VC houses, and they explained that one of them in particular said, as far as they could recall, there was only one IPO, there was only one fintech Silicon Valley IPO last year. It was all around strategic acquisitions. It was around incumbent players spotting some great innovative business ideas and acquiring that capability. Then of course it creates a whole new challenge, and the whole new challenge is, once you acquire a capability, an innovative capability, how can you then integrate that without the confines and the cultural constraints of mothership strangling at birth almost?
Okay, great, thanks for that. We've got 2 minutes left, so last question. I'm only going to take half of this question. The full question is, to assure our future, is digital capability a must, especially in the Mexican market? Now, I'm not sure we've got the expertise here to comment specifically on the Mexican market, but why don't I give you each 30 seconds to 40 seconds just to think about yes or no, basically. Is digital capability an absolute must for the future of a successful insurance company? Let's start with you, Jonathan.
I think it's a pretty simple yes there. There are plenty of people out there who are innovating and are trying new things and want to disrupt this market. So I think if we don't get in there and be part of that and be part of that change, then it's going to be problematic.
So I think from my perspective, it's a yes, obviously, but I think we need to be careful about when we say digital capabilities. I think some of the fundamentals of business are still the same. And I think some of those fundamentals of business still apply. So those capabilities you have in the organisation, you still need some of them. You just need to think about some of them in a different way. So absolutely, you need to build new capabilities. You need to partner with others. You need to buy firms or people who will help. But fundamentally, you've got some real experts in carrying out insurance business. But it's about educating those and getting them to think in a different way in a digital age is really where we need to pay some attention.
Great. And finally, Graham.
So look, my final thought on this would be digital and the customer are two sides of the same coin. So there is no future for any business if it doesn't truly embrace the customer. And so if it doesn't embrace the customer, then it won't have a future. But if it wants to embrace the customer, it has to embrace digital. So I mean, it's so obviously yes, it's kind of hard to kind of put it in to put it any more succinctly than that.
Okay, well, thank you very much to all of our panellists, Graham, Steve and Jonathan. That's all we've got time for. Thank you all very much for dialing in today, disrupting your busy afternoon. If you want more, please do once again come to the ABI's data conference on the 9th of September. 15% off, remember, be there or be square. I hope you've enjoyed this and enjoy the rest of your day. Thanks very much.